Hello. Hello and welcome to Wyckoff Training Academy. Uh, Actually, I had decided to record certain like 3 to 4 videos, but due to some reason, I was not able to record it. So this would be like what I do. I'll record 10 minutes video pertaining to what I have to discuss in this one. So now, to begin with, I've given access to 206, 213, and 208 version to all maximum people who have opted for subscription and one-time purchase. So I've already covered 206 and 208. So in this particular session, I will be discussing about 213 so that people can trade based on that. So basically, this 213 comes along with setting of like trend type for 5 minutes, or 3 minute, or 1 minute, 6, 10, 15, 30 till 1 hour. One intraday has to be applied. If you're going above 1 hour, that is like, for example, this, then you have to apply because swing trading is something which has been done above 1 hour, 1 hour or 4 hour. Okay. And if you're going above like on a daily time frame, then you have to apply short term because mostly daily time frame is applied for short term trading only. Okay. And if you go for like weekly and monthly trading time frames, then you have to go for long term trading and you can apply it on daily and weekly and monthly. Okay. So now how to trade? What sort of information this? One second, let me get my pen. Okay. What this information? What sort of information does this 213 version provides? So let me come back to 5 minutes and switch it back to intraday. So if you look closely or watch closely to this one, this is basically made based on. Actually, I had made certain versions of like one indicator named as Forex zones and all this for trading, especially trading Forex, wherein there was stop loss and targets and being provided with multiple trends, I guess. So this is an advanced version and a more improvised version of that one. So when this is flat, there is a saying in market like that there is an understanding in major traders that when the price is going back and forth, then we draw a parallel line or we draw a horizontal line. So many people say like if I draw a horizontal like this, will it be valid? If I draw a horizontal like this, will that be valid? Or like this or like this. So there is a lot of confusion like this also. A lot of confusion people are coming up with whether how to apply it and whatnot and how to think like this would be a trending path, then this would be a sideways. So how can we get into a trade? So basically, how we can understand whether it is happening so or not, or is it trending or it is going sideways. So based on I have my own unique way of like manual trend analysis technique. Based on that, I tried to make an indicator so that because a lot of people are asking for not manual approach, asking for something which is graphical and it can be visible, which is visible and which can be easily detected and easily seen. Sorry for my words. Actually, I'm not feeling that that's the reason I'm stumbling upon words. Just give me a minute. Or I'm struggling with words. Sorry. So please bear with me. So like to help us with this problem, I've developed this indicator. So if you watch closely, like for example, if I make it this one to be a line chart, then if you want watch it closely, whenever this indicator is going in a horizontal manner, wherein there is no cascading effect or staircasing effect, either upwards or downwards, that means this entire market is sideways. So when the market is sideways, there are only two outcomes according to Wyckoff. One outcome would be either accumulation, second outcome would be distribution. So either accumulation or distribution. So now many people say this entire move would be an accumulation. Then we want to see price going up to like so and so points, and or either it's just a distribution, then price going so and so points to the downward direction. That is not the case with this one. So that is not the reality, and it will not happen. People will get confused, and every time they will get confused, and they will not get the proper grasp of the market. So now, how to trade with this one? If you understand this particular tool, you will make uh, good money if you understand it properly. So what do I mean by good money? Good money means you would be well informed where the market is going to go and how the market is going to react, and where should be my or where should I plan my trades. So I'll walk you through this one. It is drawing a horizontal line based on particular transaction and particular time frame. Okay, so whenever, what are the 2 points which we have to, like there are 2 points which we have to keep in mind. For example, we'll start the canvas from this one, that is 31st of Jan, I guess. So this was the level, and this was the two level which were there, this one and this one. Don't consider this price, particular entire price action as not printed. Please consider this to be an ambiguous law, an ambiguous price action which has not been completed or not been printed over here at this particular point, or when the price was trading at this particular point. So we have two levels, recent levels, this one and this one. So for me, if the price is going to go upwards, then it should go above this one and it should come back and test and bounce back. So then I can say this is a uptrend move. If not, then price should bounce back from this particular point and then come back to this particular level. So in my trading, I always look for pullbacks. The reason being said is that when I'm looking out for pullback, that means I want to be certain of the direction of the market. So I got this breakout and then first pullback. And if I plan my position over here, my stop would be this. And once the price moves upwards, I bring my stop to break even. So in the coming sessions, you would see my stop loss trading strategy and other things as well. So apart from like in 206, we have a trailing stop loss, and in if you're trading based on 213, then I will recommend you to. And in any case, if you're once you have initiated a trade, you should take once the market is going in your direction, then you should stop out previous stop loss, because you never know when the market is going to move back into or would move back and hit your stop loss. So if I this is my level and this is my level, so I'm a level kind of a trader. I always look for pullback, as I mentioned earlier. If price is going upwards, then it should have gone upwards. So this gives me first signal that now the trend is going to shift, because we have not sustained at this particular point. This pullback has not resulted in an upward move. First point of consideration. Second point of my concern is like this is the first point that we are not going upwards. The second point, we are coming back here, bounce back, and see the price action. It is sluggish in nature. So as you can see, this is like you can say grinding of price towards upward direction. There is no whatsoever momentum. This might be because we are in the Asian session or some other kind of sessions wherein the liquidity is not present or volume is not present. So in that case, these are the two levels. So now once this new level is formed, now my focus will be shifted to this and this two recent levels. So either I would like to see price coming back and testing and going downwards, or either I would like to see price coming here and bouncing back. So it happened over here. If you see, you watch closely, price came back and then we got some degree of a retest at this particular point, but it didn't resulted in a home run. At least I was expecting price to go with this particular point, but it didn't. So this gives us an understanding that this market has no potential to go upwards. This is my second point of concern. Third one is if I'm drawing now, I have these two levels. So anything in between this thing is not tradable. Either I would love to trade this one, or either I would love to trade this one. So in either case, I'm done. I'm clear with the direction that now the price is going to go upwards, or either price I would plan for a short sale, or either I would plan for a long opportunity or a buy opportunity at this particular point, or buy trade. So it didn't happen. It plummeted downwards. Now, if you watch closely, price has no whatsoever effort to bring the market to this particular level. Rather, it barely tested this particular price. So now you would say you're considering this level and this level to be recent. But when the price moves in the particular direction, the recent levels, corresponding levels to that particular price, holds key importance. So, like for example, if price has to reach this particular level, then it has to break this level as well as this particular level. So if it has not reached this particular level or this level, then the first target would be to of this level. So here you can see we got a selling opportunity at this particular point. Now, when this particular selling opportunity occurred, the price went downwards, and now we have new levels formed, which are of red color. That means red color defines selling, green defines buying. Okay, so here you can see these two new levels are formed. So now whatever has to happen, it happen in between these two particular levels. So if I now the price is going in this particular direction, there was no whatsoever selling opportunity or buying opportunity at this particular point. Till the time we haven't got at this particular line formation taking place at this particular price action. So now once I get two identical, you can see these are the shifts. You can see the red magenta or green color, what you can see, the square or diamond, whatever you want to name it. They are indication that now the new level, a new price formation has taken start or has started. So when I get two parallel or two corresponding in the same straight line, I consider this to be a sideways market. So this is the trade. This is a place wherein I would not try to place any trade opportunity, not try to place any trade, because having said that, we are going sideways. As you might have understood that with what logic I'm setting for a trade. So or I'm looking out for a trade. But even having said that, this is one single level of price action. Now you can see if this was the case and this was the case, it is this particular price action. You can see price has respected this particular level. So if I consider this entire line or entire indication by this particular indicator to be a one single level, and the recent level is this one. So now you can see it has respected this level and plummeted downwards. So if I was an opinion that this was I was of an opinion when these two things or two diamonds printed, I was of an opinion that now we are going sideways, irrespective of what now is going to happen. That has to happen over here or either any previous level which is if it is there in the past, then it has to happen at that particular point. So let us zoom out and just see what we have at this particular transaction, whether we have a certain level or not. If there is no level, then we will not go for a trade, because we believe in trading based on previous history. And like for example, if we draw this for the level, it was respected at this particular point. You can see how far we can go. Like for example, this particular level, if we see particular transaction, how much opportunity, this was the level wherein we got greater opportunities. And once this level was crossed, we got opportunities at higher degrees for long positions. So let us zoom 1 second. Let me see which price level is this one. 773. So if we see what is there corresponding to 773. No, we don't have anything here. 98. One second, let me plot the line. It will make a task easier. So now by doing so, we can see the things. So if you see, look at this particular point, we don't have any particular corresponding level at this particular point. So, and if we move towards the backward side, we might find it. We may find it. We may not. So, but this is the case. We can see. Let's see, my communication tool. We can see we are going sideways. Then we got this price respecting this particular level, and then coming back, and then moving back and forth. So another thing which I want to highlight in this particular case is that when we are going sideways, now either price will go upwards, come back, and then move upwards, or either price will go downwards, come back, and then go downwards. So in either ways, you can plan either a short selling opportunity at this particular point or a buying opportunity at this particular point. Now, how would you define whether we got a pullback or not? Like one of my this Malaysian student is struggling with pullbacks. So if he is watching this video, always remember we consider pullbacks to be the pivot points. They are the corresponding highs lows. If there is a price action like this, we will not consider this to be either pullback or this thing. We want clear and precise. There is no thought of thumb where there has to be a 5 candle, 10 candle, 20 candle, or 2 candle. We always look for it should be identical, it should be visible, it should be identified by every trader, every novice and professional trader. Like for example, this is one pull, this is one push, second push, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th. It should be visible. But over a period of time, you would understand it. It is not something which can be done in a day or two because it requires observation. And once you're observing the market, you will automatically come to your head whether it is a swing point or not. So because market has a different tendency to move in different time periods and different with the volatility and without the volatility. So having said that, this was a sideways movement. Though we haven't got any level at this particular point, we are clueless where which side the market is going to be. So at times it happens we don't get any levels, so we don't trade on those particular days because when you are not trading any trade, when you are not initiating any trade, that means that day you are also saving money. So saving money is most important in trading rather than trading and losing money or either making money. So this is how it has to be done. Now, what is the logic behind this particular entire indicator? It comes with a simple logic. If we are trending, it should go like this. This level, this level, this level it holds importance when the trend is upward. If the trend is downward, this level, this level, this level, this level, this level, this level holds importance. So if we are coming down, price should respect this particular level and sink in. If we are coming down, price should respect this particular level and sink in. So that on every staircase like this, like when you're climbing up on the stairs or you're coming down from the stairs, it would resemble a staircase move. So try to catch this kind of moves. We are not here to trade on every ticket, every what you can say on every. I don't like to trade on every tick, or I don't want to get every trades, irrespective of what you can say whether the market is going sideways or this or it's not offering me any trade. I don't like to run after trades. I like to see when trades are coming back to me because that is the point where my risk is minimum and my reward is maximum. So out of like there are certain days, certain weeks, certain days in a week or certain weeks in a month wherein I don't get any trades. But when I get trades, I compensate whatever profit I had planned for the entire month or whatever the target is, what I have planned for that particular month. If you hover over here, like for example, if you drop down for scalping, then it also comes with scalping. Scalping is something wherein which you can try to apply it on either 5 minutes or either 3 minutes. So if you apply it on 3 minutes, it will give you some different kind of features. Like it will give you more, like as we are watching Euro USD. So you can apply it on this one. Like you got a buying opportunity at this particular point. You haven't got any selling opportunity here. Price was moving sideways. You got a buying opportunity at this particular point. You got another buying opportunity at this particular point. So there would be, and your stop would be here. For buying my stock would be here. And for like example, which example I can give? Once again, let me see if I get any example. So try and understand. I'm looking at the levels to price to touch so that I can move with the trend and I can enjoy the profit and enjoy the trade along with the trend. So if you are planning to go below 5 minutes, you can go for the scalping. But rather, if you're planning to trade with the 5 minutes, even if you can, if you observe this thing on a 5 minute, this will also work for you. Like, but again, it depends on instrument to instrument. I don't advise to trade 5 minutes for with scalping. I advise like because I'm choosy with trades. I like to see trades which I'm getting which I can choose from with the availability of trading opportunities to me. So, but in Euro USD case might be different because keep one thing in mind: every like any human being, this might sound like a soapbox to you, but out of my experience of like whatever over a decade of experience I have, so what I have seen is like any human being market, every market has its own pulse. So if you understand the pulse of the market, like for example, what is the highest momentum or what is the or what is the moment we can expect from A to B in any particular script might differ from instrument to instrument. Like for in case of Euro USD, like the movement from A to B would be different as compared to XAUUSD, that is gold. So that keeping that thing in criteria or that thing in your mind, you should decide which time frame fits into your pocket and which one you would like to go for. So this is 213 is a standalone you can say a tool, which is I normally I enjoy trading based on this one. Like for example, we look into XAUUSD because the reason being said is that it gives me a ample of opportunities. Like for example, like I spoken in this video, previous video, the video which I recorded on Friday, I guess. This was a sideways market and we got a this level was I was expecting price to respect this particular level and it bounced back from this particular point. So and at this particular point also, and we got this particular pullback, this opportunity. So there are at times I get good trades in a week. At times I get so-so trades, and at times I don't get any trades in that. So it is a business. It's a business, and you don't every day you cannot make $1 million, but at the end of the month you would make something out of your or it will meet your expenses and it will make some good money for you. So in the coming sessions, I would do more videos based on how the market, how a successful trader can be, or how can an average trader or a new entrant can make a career out of trading. By just following simple rules and principles, you can make good money, and for that, you don't need to have any uh, fancy kind of algorithms and things. Just by following simple steps, you can make good money. So before we end, I will just look into one market for that Malaysian student. Let's see. FCPO. The reason I'm looking into this FCPO frequently because this is a quite challenging market for me. This is the first time I'm getting this. I got into this kind of market, and it is a challenging market because unlike Indian market, this market has also has some kind of greater degree of manipulation. So I like to push my limits and I like to test my knowledge when it comes to new markets. So like you can see on 5 minute also, when like this market is also respecting, and it's not about every time every time we are winning the race. It's about how we analyze and do we have a proper tools to analyze them. Like for example, this was the area wherein there was if price has to go down, it has to first break this level and then this level, then corresponding levels. So it works in a trending manner. Gives you a trending idea as well as it shows you what sort of correction you can expect and where the correction would likely happen and where it ends. If that is not the case, then that would be a beginning of a new trend. So I hope this session has added value into your understanding. So this indicator is excellent, and it is something which is very closer to me, closer to my heart, because it gives me a proper understanding. Because I'm not bothered about like many people come to me with this kind of thing. I don't understand how much far does the market is going to. I'm not bothered about that thing because let the market take care of your profits. Where I can make a probable where is the position or where is the price, what would be the price level wherein I can make a position so that I can enjoy the whatever profit market has to offer me. So let the market take care of profits. I initially I was also of same notion that I want to see how much the market is going to go first, where it will twist and where it will turn. Like more kind of an astrological kind of attitude I had in the past. But now, over the period of experience, uh, I'm more into kind of a reactive kind of leader. I just want to see where the price is having a high possibility or probability to turn. So, having said that, I'll end my this particular video of 213. I hope it has explained you, given you a explanation in detail. And over a period of time, every day I'm going to record 5 minutes video of our Euro USD and XAUUSD with the trade setup if I get any, so that you would be enlightened or you would be updated with the trade setup that I'm talking about. So thanks a lot for watching this video.